Hello, CQA Institute. We are Wilkes Gold. I'm Kyle Gattuso, Senior Finance Major.
I'm Brady Wing. I'm also a Senior Finance Major.
I'm Noah Dernan, a Senior Finance Major.
I'm Michael Hauk, a Senior Accounting Major.
I'm Sam Eiler, also a Senior Accounting Major.
I'm Nicole Harmer, a Senior Finance Major.
Austin Hackenberg, Senior Finance Major.
Jorge Gonzalez, Senior Finance Major.
The agenda of this video will cover the three teams within Wilkes Gold. The first team is the quantitative team, the second team is the fundamental team, and the third team is the compliance team. First up, the quantitative team will talk about their procedure. As a group, we decided that we wanted the foundation of our portfolio to be surrounded by a model. For the model, we chose to focus the model on value and momentum. We chose three factors to put into this model. Brady will talk about the three factors.
I'm Brady once again. I was part of the quantitative team. I'm going to define the three factors that we used for our model. The first factor was a 12-month active return with 1 month lag. This is defined as the percentage change in price for a stock from month T13 to month T1. The second factor we used was the 5-year relative trailing 12 months earnings to price, which is defined as a stock's current trailing 12 months earnings per share before extra items to price ratio minus the average of the EPS in the last 60 months scaled by the standard deviation of the EPS over the same period. Market ranks this factor in descending order. The third factor that we used was the book to market. It is defined as the most recently reported book's value per share for a stock deflated by its trading price.
After using IHS to calculate and get results for our model, we were pleased to see what we saw. We decided that we must make our model sector neutral, so it did not favor one sector over the other. We used market. Market gave us the ability to see the effectiveness of the model. Next, the fundamental team will explain how we use fundamental strategies to pick stocks from the model we've generated.
Hi, I'm Michael, and I'm part of the fundamental team. One of the fundamentals we used was Weinstein's 4-stage analysis. When using this analysis, we would look at a 5-year chart. When looking to long a stock, we would look for a stock that was going from stage 1 to stage 2. A key indicator of a stock going from stage 1 to stage 2 was an increase in trading volume. When looking for a stock to short, we were looking for a stock that was going from stage 3 to stage 4. A key indicator of this is when a stock loses its momentum in trading volume.
I'm Sam. I'm part of the fundamental team, and one of the factors that we looked at was William O'Neill's Can Slim model. It's a growth stock focused model. It's based off of big winners from each year, and Can Slim is an acronym, and it stands for C, current earnings of EPS and sales growth. We're looking for anything greater than or equal to 25%. A, annual earnings growth rate, again, anything equal or greater than 25%, and that goes over the past 3 to 5 years. N, any company with new products or services entering into the market. S, supply and demand for the equity within the market. L, leaders in the market for ROE. I, institutional investors. And M, any market trends.
Hi, I'm Austin Hackenberg. I'm part of the fundamental team, and everyone on the fundamental team, we actually use our Bloomberg terminals here at Wilkes University, and on there we get cutting edge news as well as all the statements for the companies, their financial reports, any other statements they make with any of the regulatory bodies. And we were using that to not only give us more of an insight into the companies to make sure that they aligned with the quantitative models that we had, but we were also using them to actually be part of our fundamental ideas that we had, which was using Can Slim as well as Weinstein's 4-stage theory to make sure that all the stocks we were picking were actually lining up not only with the model that we had, but also with what we thought would give us better returns. Next up is going to be compliance, and they'll be talking about how we kept our portfolio in check.
As part of the compliance branch, our main goal was to make sure that our portfolio was compliant inside the guidelines that was given to us by the CQA. To control this factor, I personally made all the trades that were involved in a portfolio.
While Noah was making the trades and referencing the stock list that was given to us to make sure we were within the guidelines, we made sure that we always had a 40 long and 40 stock that was within a 2.5% of each other. To ensure our team knew what was going on, we relayed our trades at weekly meetings.
To sum up the video, you can see that the procedure that we took was we wanted to create a model and then use a fundamental analysis to pick the stocks individually that were generated from this model. Last, we're going to summarize the philosophy we used to create this portfolio. First, the model that we used generated a list, and then from the three factors within the model, it ranked the stocks from 1 to 100. Then the fundamental team went in and handpicked the stocks ranked 1 to 100 using fundamental analysis. Currently, on February 11th, we are in 8th place in return at 2%. We are in 7th place in the Sharpe ratio rankings with a Sharpe ratio of 0.4. And our alpha beta rankings, we are in 2nd place with the alpha of 4.6% and a beta of 3.5. Going forward, we'll stick to the same strategy. Our portfolios consistently beat the benchmark, and we continue to recalculate and reanalyze our portfolio from a fundamental and quantitative standpoint. This has been a great experience for us, and thank you for the opportunity.